Welcome back to the show. I am Karl Hughes of Retain Trust as always. And today I have my good friend and fellow agency holding company owner, Peter Kang. Peter, thanks so much for coming on. Give us a little bit of background on what you do.
All right, Karl, thanks for having me. So a little background. I grew up in New Jersey, went to college in New York City, met my co-founder there. And, I went off to, after graduation, worked in Wall Street for a year, but, ended up teaming up with my co-founder to launch an agency business. So, kind of first a two-man operation, kind of doing website design development, but, we were able to stick with it and grow it over the next, 10, 15 years. And, that was Barrel. And so, we work with a lot of like local New York businesses, nonprofits, some B2B folks as well. But, ultimately ended up kind of getting into e-commerce, and we were early adopters to Shopify. And, with that, we decided to focus, and kind of position Barrel as like a Shopify agency. And did that. And around like the 15 or so year mark, we ended up spinning out a bunch of like non-e-com clients into a separate company called Vaulted Oak. And, we put one of our PMs, project managers, in charge of that business, and that became Vaulted Oak. And so, that was the first time we, kind of experienced the joys of like, I guess, passive income perhaps, or just, just owning a business without being in the business. And that kind of led us down the path of, hey, could we do this a bit more? And so, we ended up launching another agency called BX Studio, specializing in Webflow, B2B marketing websites. And then, after that started doing well and throwing off cash, my co-founder and I decided to take ourselves out of Barrel, which the Shopify agency at that point, which we had been running for close to 18 years. And so, so it's been, I'd say like 15 plus months now where, the two of us have been have been out of the day-to-day running an agency, and we've been focused on building what we call confusingly Barrel Holdings. But like it's been a lot of fun. That's where we're at today. Our kind of goal is to acquire and grow, specialized agencies, kind of in that, whether it's platform aligned or kind of focus on a specific niche vertical. That's kind of the type of companies that we're looking for and looking to grow.
Very cool. Yeah, this will be fun because we have a lot of things that we do similarly or are doing similarly, and a lot of things I'm sure are different. I was listening to you on a podcast not long ago about the start and origin of Barrel, and you guys started this, as most agency owners do, unfortunately, as a generalist, we'll do anything you can pay us to do kind of agency. At least that was the impression I got. And you pretty, within a couple of years, you kind of started to narrow in a bit. What were some of the key things that happened that made you realize we've got to like get more specific with what we do and who we serve, and like kind of how did you find and form that niche?
Part of it is, we talk about this a lot, where often the niche chooses you, and so it's not it's less about you being proactive and deliberate and kind of strategically choosing what you want to do, but it's more like you do some projects, and over a period of time you're like, wow, I have this cluster of work that, I've done in this space, and it makes it that much easier to win the next bit of work with a similar type of client. An earlier instance of this happening was, we were like, let's say early 2010s, we were pretty deep into the WordPress space at Barrel. And so we were doing a lot of like these content management system implementations. And, we actually ended up winning quite a bit of work in the cultural like arts institution space. So, we do, like Jacob's Pillow, which is like dance, nonprofit in the Berkshires, Alvin Ailey, which is like, a dance group that's like iconic in New York City. Mark Morris Dance. Like there's like a number of these like folks, and like just winning one made it so much easier to win the next. And we get invited to RFPs, and you show the work, and you're like, oh yeah. And so we're kind of like, oh, are we like a cultural arts institution, like web firm? I mean, and you kind of, we fell into like, oh, the path of least resistance, because like it's easy to win. You just keep going down that path. But I think at a certain point, like we were kind of working with a lot of the bigger groups in that space, and like the budgets with the smaller groups are just smaller, and so we just kind of saw limitations to it. And it was around the time where we all, at the same time we were doing some Shopify websites, and this is where like we're like with ecom, we're like, wow, there is quite a bit of tailwind, and maybe there's all these like at that time venture capital money coming into these startups that had a direct to consumer focus. And so we thought, hey, like I think this is just going to accelerate over the next several years, and we can benefit from really doubling down, becoming experts in this, having that partnership relationship with Shopify, and see how far we can take it. So we ended up kind of being a bit more deliberate with that. And like there's stuff that we've read in the past, Blair Enns, David Baker, those guys are always super kind of vocal about like the need to specialize position and be focused in that way. So yeah, we took inspiration from that and really went down the path. And that's where we've found kind of the inspiration and the momentum.
It's interesting you mentioned like your niche kind of finds you, and this nonprofit dance niche kind of found you, but then you kind of realize there's a cap to that like space, like, and I think that's a fair, I'm kind of pulling maybe some lessons out of that. Like, it's great to focus and to be in a niche, but also consider the size of that market. Is it realistically the business you want to run, or is that if you want to go to be a $10 million company, it probably shouldn't be websites for dance studios, right?
Yeah, 100%. I mean, like a big part of like of like strategy, right? Like strategic kind of like thinking is like, you gotta be smart about the space that you want to play in. And, you want to kind of, be in a place where, first of all, like, if it's like super competitive and commoditized and like, so like it's pricing is hard. There's so many people doing the thing that you want to do. Like, they call it kind of a red ocean, right? So you want to kind of stay away from that. But then, yeah, you also want to size your, addressable market. And so that's also important. Like, a niche is great, but yeah, if it's too small, too specific, you're just, the kind of field of clients who can actually hire you is like super limited, then, you're also handicapping yourself in a certain way. So it's like, it's so interesting because like, now with the hindsight of experience, you're like, like, and when we think about acquiring businesses, like we think about this a lot more. But like, when we were just in it, we're just like, oh, who's going to pay for the next project? And that's where you kind of end up following.
Totally. Oh yeah. It's there's definitely that balance there. Yeah. Another thing you've written about from these early days with Barrel was like the full-time versus contractor model and the cost structure that they entail. Talk to me more about like, were those early employees all full-time, or were they all contractors? Was it a blend? And like, how has that evolved over time?
Yeah, I think early on, like we were just I mean, part of it was just we didn't know any better. Thought like everyone who we work with had to be full time, so we were always expanding the W-2 pool. And this was also in an era where like headcount was a big source of pride, and it was like a big vanity metric, right? I think some people still kind of like talk about headcount when you kind of start talking about the business, but I think, yeah, especially when we started, like headcount was the way, when I go, to Thanksgiving and my in-laws are like, hey, like how big's your company now? And basically they just want to know how many people work under me. And
Right,
so like,
right.
that was important. But yeah, so it was a lot of, yeah, W-2 like salaried employees that we were hiring, and that's how we grew. But I think over time, there were some obvious downsides to that where, like the non-variable nature of the cost, was could be challenging where like, if you have if you have too much capacity and you're not able to fill it with the work, then, the utilization drops and you're basically, it just, you're losing money at that point. And so I think that we kind of learn there to be just like after some experiences where, maybe we overhired or we hired ahead of demand, we decided to kind of be more deliberate about looking at resource allocation, resourcing, and then the utilization metrics. And from there, one one way to kind of mitigate, like low utilization was to have like, flex support with contractors. And so with 1099s, you can kind of tie them to projects. And so, like you only sign them when you have, like committed work, or yeah, you could kind of have some variability where, somebody you might contract for 10 hours a week because that's all you need them for, or, you can kind of ramp them up. And that could be, like a part-time person as well. It doesn't necessarily have to be like 1099 contractor. So yeah, there's some things that we learn about like, hey, like you can piece together workforce, and like it did require a shift in thinking. Cause like, I think when you're so anchored on like, hey, everyone needs to be full-time to be a team member, like it's a very, like you build this kind of culture where you're distrustful of like folks who are, contractors or part-time. And so I think, yeah, we really had to shift that mindset and embrace more of like, hey, no, this is how you still onboard these people properly, how you can still have them, treat them as part of the team, even pay for like some, non-project related stuff, but to kind of join maybe a team debrief or something like that to make sure they feel like they're contributing in important ways. And so, yeah, we learned that over time, and that now it's like so much more fluid, honestly. Like, so, like, and I think part of going remote and also like the explosion of like the gig economy and like offshore labor, all that like has contributed to now we have, some agencies where you might have a core team, with like very much leadership or like client facing roles that are W-2 full time. And then, a lot of other folks could be, 1099 or just, on a project basis, and we bring them in. And yeah, it just creates this flex kind of structure that allows us to, yeah, like weather these times when, you might not land as much business as you think, and still be able to, come out profitably.
Yeah, I'm with you there. I think there's a lot of it will, for me, the experience was going through that first big downturn of like, oh, we're not going to be able to keep all these people, and realizing I got to lay off or cut the hours on half my W-2 people who have been counting on this as their primary paycheck. It's like kind of it's demoralizing. It's tough. Obviously, we all as business owners, part of the game we're signed up for. But at the same time, it's a lot easier when you have a good portion of your workforce who is kind of just, they know the deal here. They know they're 20 hours a week with you, and it might go down to 10 next quarter, and it might be, 30 the next quarter. But yeah, it's a lot easier to set the expectation there that this will go up and down. And so you can kind of give yourself a little bit of room to buffer there. When it comes to that, like, this is kind of jumping ahead a bit, and I do want to come back to kind of your exit from Barrel or from the day-to-day of Barrel, but do you see that as an opportunity when you look at acquisitions? Like if you're looking at an agency and they're doing okay financially, but they've got like, 10 headcount and no freelancers, is that a chance to like maybe change something there? Is that like, you wouldn't go that far?
Yeah. I mean, I think it's like always dependent on that particular agency, because, one of the things that we do want to preserve in acquiring agencies is the culture. And, well, let me preface it by like, we kind of look at acquisitions in two different ways. One is like, to bring in an agency that's, and preserve their brand and their team as much as possible. And so then they become, kind of a visible agency within the portfolio, and a standalone, we call it, right? And then the other types is more of the, bolt-in or tuck-ins to an existing agency. So in the case of the first one, I think, we have to be just kind of sensitive about, hey, like they've worked, this is what's made them successful, and like, worthy.
Don't break it.
Yeah, like this is why like we found them to be attractive, and why we've paid to bring them in. But with some of these bolt-ons and tuck-ins, there's definitely like we're also looking at, okay, like maybe there's some efficiencies to be gained if like if like there's some redundancies, so like you can kind of cut down headcount and shift some stuff to like, maybe they never use offshore, but like there's no loss of quality because, they do exactly the same kind of work, whatever. So we might be a little bit more proactive there, just because in that one, you have a company that we own already that has an established culture, and you actually want to kind of absorb another agency into that culture. So I think there's more leeway. So yeah, I think it just depends on the situation.
Looking back at Barrel and kind of your first 15 years with that company, are there any major mistakes that you kind of, again, going back, you'd do better the second time, or that you think about often when it comes to these acquisitions you're doing now and other companies you're running?
Yeah, no, and this is it's so funny because it plays out right now in like the subsequent agencies. So like we're just talking about like the way BX Studio or Webflow agency has just grown so nicely. Like just they just had a much, I think, faster growth trajectory because I think we've been very conscious about helping our co-founder and CEO Jacob to like avoid some of the mistakes that we made, and a big part of that, some of those lessons are like, look, like just stay focused on building this as a service, service business, and it's about the clients, it's about building a great team, it's about like it's about kind of building that reputation with the clients, and then from there, like and not basically like trying to do that while like we did, like try to build a SaaS app or some other thing that we thought was going to be the real moneymaker, but like and just being distracted in that way. So like staying focused on that core offering or that service, and then on top of that, like investing early into business development, sales and marketing, like not being shy about like, yeah, building like a partnerships side of things, and like, being very proactive with like, bridging that relationship with Webflow so that we could get deal flow from there. And then also just being generous with commissions with other agencies who might give us leads. And so things like that, hiring salespeople much earlier, hiring marketing support earlier, all the things that we didn't do, like we've been able to do with BX, and that's helped to accelerate growth. And then also like investing in, skilled people, whether it's on a consultant basis or like just, investing in leadership early. So not just kind of trying to get by on junior talent, with direction, but like, hey, bring someone in to really own this part of the business, and give them some autonomy. So yeah, those are some of the things that like we yeah, that probably like slowed growth for us on the Barrel side, but I think just it's been good, and Barrel itself has adopted these things now too, and I think they're gonna be on a good trajectory.
So I look at a lot of P&Ls as well from agencies, and I imagine we see the same thing, which is a ton of most. I would venture to say most of the founders I look at their P&Ls, they underinvest, in my opinion, on sales and marketing. You're just talking about how you do that better now. Why is that? Why do they underinvest in this? Why is that the gut reaction from a lot of agency owners? Just like spend as little as possible on that sales and marketing side.
Yeah, no, I think part of it is like the fact that it takes a long time to see the ROI on that spend.
Yeah.
And so I think it's literally like, you know, I mean, the most common classic story is like, the agency founder like does all the sales and stuff themselves, and it's they go, oh, it's mostly referral based, and then for whatever reason they get busy in the business and they just aren't as active, kind of going out and like kind of cultivating those relationships, and then they go, oh, we're mostly referral based, but leads have dried up. I'm gonna go hire someone to the cold outbound, and
Yeah.
and then it doesn't work because of course, like
Right.
that's not how cold outbound typically works. You don't just turn it on and all of a sudden get these kinds of opportunities. And then they go, oh, it doesn't work. That's why we don't really spend money on marketing. In many ways, it's a very naive way to look at sales and marketing because, you like, and business development, which I think, I think of as kind of the bigger umbrella of things is like, this is relationship building takes a long time. And, a lot of the things that you know, benefit from today, you probably planted the seeds, months, if not years ago. And so you have to think about sales and marketing in those ways, like investment in sales and marketing in those ways. And it's kind of like, okay, like what are the places you're going to show up at where you're going to, kind of get your name out? What are the things you're doing to continue to stay top of mind to those folks? And what are you doing once someone indicates interest to kind of bring him through that pipeline and close them? And a lot of times, like, this is where if you underinvest in sales, for example, and as a found, if you're a bottleneck with the founder and you're just not on top of kind of processing these opportunities and getting them through and like responding in a timely manner, like you're going to drop balls and you're going to lose deals. And so but like these things they just show up too late because you have to invest ahead of time. You have to train somebody, you have to have them shadow you for weeks if not months to finally get the benefit of it. So I think it's like the lack of like long-term thinking and like the just being able to see the investments as what they are, investments. I think that's where like a lot of folks trip up in terms of why they underinvest in this area.
Yeah, I agree. I think sometimes it's like they don't want to cut into their own SDE number. I mean, if you're a $1 or $2 million agency, anything you invest in sales and marketing probably comes out of SDE, at least initially. I mean, you're just like, you could try to cut your cogs, but my guess is they've already done that to whatever extent they feel comfortable with. So yeah, you're right. Like there's the investment side of it is hard. I think the other thing too that you bring up here, which I would totally agree, is the naivete around how these deals get done. As an agency, if you're closing 5, 10, 20, $100,000 deals, they don't happen off one touch point, one cold email ever. Like I always tell people, and you had a great LinkedIn post about this, about like the origination of a deal a week ago or so, I think. And I always tell people, like, think of the last $20,000 purchase you made for your business or home, or yourself. It was like a car or a large purchase for your business or a large hire or something. Those are all $20,000 plus purchases. Did you make any one of them off of a single cold email, a single ad that you saw on TV, no, absolutely not. It was, you saw those things. Maybe that introduced the idea, but it certainly didn't close the deal for you. And like, it just, again, thinking of like, put yourself in your buyer's shoes. Like, what does it take to close a $50,000, $100,000 graphic design contract? It's not one single cold email. It's not one LinkedIn post. It's years, like usually, of work. And you just got to get used to that.
Long-term time horizon. That's so clutch. Yeah.
Right. So you eventually got yourself transitioned out of that, CEO role at Barrel, and you're a couple years out of that. So you've at least, I think it's, knock on wood here, it's working. But like, what was hard or scary about that for you, or do you wish you had done it earlier? You think the timing was right? I'm curious to hear your experience there.
I mean, it all starts with like, being, like trusting the right folks and just having the right talent in place with that. So, we were very lucky on the Barrel side, honestly. And I think the reason we even entertained it in the first place, because, it is very hard to kind of think about a company that, you've been, intimately involved with day to day for like 16, 17 years, to like think about it existing without you. And so, but luckily, we had, a team member, Lucas, who, he started as a designer, in his early 20s, and like worked his way up to be like, a senior designer, like creative director. And then like, and because eventually like, became kind of like our chief experience officer. So kind of like overseeing the delivery side of things and the client experience side of things. And so that was like, and we knew like this guy is great. Like he's just so, thoughtful, like just smart, like great with clients, just, thinks things through, strategic. And so we thought, like we knew like we had someone special, who could, rise to the occasion, whatever we put in front of him. And so like 2 years before the transition happened, we had the convo, because I was like, look, we give you a lot of responsibility, but like, would you like to be CEO of this company one day? And he's like, yeah, like I think so. I definitely would be interested. And so we talked through like what that would require. And a lot of it was, hey, there are a couple areas that you just haven't been as exposed to that we'd love to spend the next 24 months to just really iron out and make sure you feel comfortable. And part of that was business development, like new business, especially like just landing new clients and taking those sales calls and kind of like just understanding how we did that. And then the other part was like more on the finance side, like, hey, like I know you didn't kind of grow up doing the stuff in spreadsheets, but like we want you to get more comfortable. We want you to be able to read a P&L and just like really think about revenue forecasting, stuff like that. And so, we just kind of steadily work with that. And then along the way, we like started giving him more responsibilities around like running certain meetings, as well as like, certain hiring decisions, thinking more about org chart, et cetera. So like all those things start to come together. And like, yeah, we set a date. Honestly, like it was like right around when Barrel turned 18 years, like our 18th anniversary of starting Barrel. And we're like, yo, that's when you're going to take over the reins. And so, we kind of made that symbolic transition. And this was also, in a down year too. This was a year we lost like 3 of our top 5 clients. So it was like, it wasn't like, there were times where we're like, oh, wow, this is like, we're handing him basically, this
a sinking ship.
A sinking ship or something, it's like, it's very challenging.
Yeah,
But
yeah,
when we thought about it, we're like, look, like we've been preparing him, and like this, like
yeah.
what better moment than now for him to kind of take it over and like really turn the ship around and do a good job. And honestly, like he has. It's been great. Like just the the way that he just kind of took control of and just made it so like reflective of like his vision for what the company could be, and just like the bringing kind of a very like he's all about like kind of standards and like kind of performing to expectations, and just really great communication with the team. So like we saw that shift happening, and it was great, like just witnessing that, being able to support that. It's been a lot of fun, and yeah, there's just super excited for like what's to come in the coming months and years too.
Yeah, that's great. And I do think there's something to be said for starting in a bit of a downturn. And maybe, and not that it's a good thing, quote unquote, but it's a like it is a reality of this role, right? And what I mean is, those of us who are small business owners, we know there's ups and downs. If you talk to anybody who's been an entrepreneur for 10 or more years, they've had years where they doubled, they've had years where they halved, almost without a exception. And maybe it's not quite that extreme, but it's still like we all have the ride the wave. And I think it's really important to build yourself the mental resilience of going through those ups and downs and not losing all faith when you're in a down, or thinking you're hot shit just because you're in an up year and you've got it all figured out. And I say this because I'm learning these lessons too. I'm 5-6 years in, like I'm still fully internalizing this. But I think that's, again, for anybody who's going to run a company, just be ready for that. If you're coming in as an outsider or whatever, like be ready for that feeling. Have you guys to date, and we're kind of shifting here into Barrel Holdings, but like, have you to date hired an outside person as a CEO, or have they always been internal from within? Because I think yeah, go ahead, and then
Yeah, no, there's been a few of these outside CEOs. So like so there was this company Catalog, which we bought kind of it's like let's say a distress situation where the founder wanted out like kind of within months of selling, and we kind of had to figure out a situation there. We brought in a CEO to run that one outside, and yeah, like that. So that was an interesting process where we had to we didn't have as much time as we would have liked to bring in a CEO, but like yeah, we found someone who took it on. We actually ended up divesting of the business to him, so he now owns the business and like kind of runs it outside of the holdco. But yeah, and then there's a few other ones like what we had. We had another venture slash like like a basically like an agency startup that we had launched earlier this year with a CEO co-founder basically, and like that didn't quite pan out, but it's a good experience as well. And then yeah, I say like BX Studio, Jacob, he was coming from the outside, like we had met him before, but like just he hadn't worked in our kind of ecosystem yet. So yeah, there's cases like that where yeah, where we'll do both. And I think like yeah, as we kind of move a bit towards like buying bigger agencies, and if there's a need for a CEO, like we probably invest more heavily in like a recruiter and like go through a full on process to kind of scout for that role. But our preference is finding folks within the org who might be ready to take on that CEO role.
Yeah, I would think so, because it seems like the especially if it's a fairly good sized company, the like cultural sort of jarringness of like bringing in a complete outsider CEO could be pretty tough in a people heavy business like we're in. And then customer relationships matter so much. These people are completely foreign to the customer base. Like again, not to say it's impossible, because clearly you've done it, other people I've talked to have done it. But yeah, I don't know, how do you kind of solve for some of those challenges, or have you figured that out? Or is it still kind of a thing you're figuring out as we go?
Yeah, no, still work in progress. Like there's no kind of silver bullet for it. So yeah, no, I totally think it's like, yeah. And and that's the thing, is like anyone who says that there's like a proven process for it, I don't know. It's like such a hard thing to really get perfect all the time.
I agree with you there. I think whenever people tell me they have a proven process for any kind of hiring, I raise an eyebrow because I just like, again, I do believe that having a process is better than no process. And I do believe you can have a better hit rate than some people for sure. But I just have not seen anyone who I really believe has figured it out every single time. Like it's hard. People are messy. One thing I appreciate about you, Peter, among many, but one of the things is like your willingness to kind of just do it and experiment with things. This has come up a few times on this call, but I've heard it or seen it in your newsletter and heard it in your talking in the past. Like you guys, didn't know what to do with these extra clients. You kind of just say, well, just spin them off into a different agency, right? Like you are putting money into these startup agencies, and some of them work, some of them don't, right? Like you're buying different types of things, some distressed, some solid. I know that some of that experimentation was intentional, and I'm not acting like it was all flippant. But give me your sort of philosophy here when it came to Barrel Holdings as you started, and then maybe what it's become, because I'm sure it's evolved and gotten more mature now.
Yeah, and this is like kind of just our philosophy in general is like, we might have like kind of a loose idea of like where we want to go and what we want to do. And maybe there's some inspiration, that kind of pulls us forward. But then as you get deeper into something, you realize, oh, this is not quite what we thought. And there's like new information that comes and you kind of, and we were like, look, let's calibrate and like, let's adapt and, kind of find, refine what we're doing or revisit the strategy. And so that's, honestly, I think that's just a good way to, I think just go through life, but also just like, think about business as well. And that's been the case for us on the, Barrel Holding side. And, obviously like, if you're doing something that's like, super focused and exactly, kind of have a clear vision for it, obviously, that I think that's a different case. But in here where it's a little bit like the models that exist aren't quite like, plentiful and as well documented, and like the information isn't as available, like, yeah, there's some things you just gotta kind of do on your own to figure out, or also just seek advice from folks who kind of might be tangentially doing similar stuff. But yeah, with Barrel Holdings, like initially, we were so enamored with obviously like the Berkshire Hathaway model, Constellation Software, like some of these like holding companies that that are like serial acquirers of business, and this beautiful model of like they hold these cash flowing assets, right? These businesses generate a lot of cash. You can take the cash and then you can buy more businesses that generate more cash. And so over time, you just have this like wonderful flywheel that like allows you to keep on compounding it for a long, long time. And it just becomes this beautiful thing. And all of a sudden you have a big business. And so we thought, okay, we like maybe, we can buy small agencies, that kind of generate, initially, I think we were like, oh, anywhere from like, 2 to 10 million, dollars of revenue. And let's say, you're able to get EBITDA of at least 25%. And, that's great. Like on a $10 million business, if you can get like a couple million every year, like that's great. Like you're able to, take that cash and like, deploy it and buy more stuff. That was kind of the initial thinking. So we're like, all right, that's kind of the loose outlines of like what it is, what's going to be. Let's see what we can do. And then, luckily we had a couple of agencies that were, throwing off some cash. And so we're like, okay, we can kind of think about this. Some of the things that came into play was like, look, like the amount of cash that we have initially to invest is nowhere near the amount needed to buy, a proper business, like and that's the thing. And then we ended up like initially kind of bargain hunting. We're like, oh, are there like distress agencies that we could do? So then we went down that path and, we looked at some agencies, even bought one, and like, they call it a falling knife for a reason, because you're going to get cut. Cause like, like they're kind of, yeah, they're, they might've had a bright spot, but then they're kind of on their downturn of revenue and, like just the reputation, whatever it might be. So it's really hard to turn those around, especially when we're not like, we're hiring, an outside CEO to come in and try to do it, on their own with very limited resources. It's just hard. And these are like just, they've been stripped to the bone in terms of cost to not lose money. And so you just put yourself in like a losing situation from the get go. And so we're like, like, and then, of course there's like you read enough like Buffett and Munger quotes, there's like a quote for everything. But like it's like they talk about buying quality businesses and why that's important and all that stuff too. And like I just like we recognize, okay, maybe we gotta do that. And so we're like, all right, if we're gonna buy a more significant business, can't just buy it with the cash on our balance sheet. Probably have to have some debt. And so that's where, obviously for us, and you're familiar with this, like just leveraging SBA loans and just seller notes and other things to like try to do a deal for more than the cash you have on hand. And so that introduces different dynamics, because now you're not like a pure cash flowing entity. You have debt service. And so and then you kind of we got to thinking like, well, like that's great, like we could just pay down our debt over the next 10 years, but then what? And then we started thinking, well, actually what's attractive is in that time, like, can we grow the business and make it more attractive? And then if you're able to exit it at some point, like that's great return for us as well. And then even for some of our existing businesses, we started thinking, do we have to hold these forever? Like, and we talked about this briefly at the beginning, but like just like the changing landscape of the tech marketing and whatever space that we play in, it's like are we sure that people will want Webflow websites 8 years from now, 10 years from now, and like we'll at the same kind of demand, at the same kind of pricing? Because I could tell you part of the reason Webflow started doing really well was it started taking away market share from WordPress, because we were able to do WordPress sites for a lot cheaper, a lot faster, a lot less. So it's kind of like, like in this fast landscape, like in some ways, you obviously want to have teams and people that are, super adaptable and willing to innovate and adapt to, change and evolve services to meet what clients need. At the same time, like, I think there's a window where like you can, build the business really well for 3 to 5 years and then, explore an exit. You don't have to, but like at least have that option. And so that's where our mentality has shifted to being like, all right, like Barrel Holdings, we like long-term holds. Great. That just means the business is, like it has durable cash flows and it's something that we want to hold long-term. But also we're in the business of trying to grow agencies, with all the experience that we have and, just some of the network of folks that we could bring to the fold and like, just support our agencies. We think we can grow these agencies and, get to an outcome where, the leadership team plus ourselves as like the investors and and owners can realize a nice exit. And so that's where we've kind of landed, where it's like, all right, like depending on the agency and the portfolio, there could be a growth trajectory and a way for them to, have a successful exit. But in the meantime, they're generating cash flows and allowing us to at least, have enough to make some down payments on some of these deals that we're looking to do. Yeah.
I just finished reading the Tao of Charlie Munger, one of his like collections of quotes, and one of them for sure this is reminding me of is that, they'd rather buy a great business at a good price or fair price than a shitty business for a great price. And, they don't say shitty. I'm sure they say a bad business, but whatever. So, I think there's for sure something to that. And it is interesting, your discussion here on the tech side and how the landscape changes and how that, in holding an agency, if you're going to buy and hold agencies for 10 years to pay off an SBA loan and try to kind of just maintain it, that's fine if you think that category of what an agency does is for sure going to be around for 10 years. But that's a big question mark, especially now with, AI looming in all areas of services. And I think we're both, we were talking briefly before about this. I think we're both thinking about this a lot as we adjust our strategy going forward. So I think that's fair. One thing I was going to ask you kind of it sort of gets to a tactical question that a lot of listeners will probably have is like, what makes an agency, a small agency, attractive to a buyer like you? And, you've got your criteria published, if I remember right. I think you've shared that with me before. But give us the kind of high level. What are the categories of things you're looking for? And what could a seller potentially do to kind of make it fit the right category for you?
Just kind of going back to what we talked about with like the strategy aspect of it, like it's playing, first of all, is the agency playing in a good space, and I think, for example, like, a space that we probably won't find ourselves playing in is like, let's say branding for startups, right? Like You know, like that's something, it's as red of an ocean as it gets. And like, there are people that are successful at it, but you just have to be really, really good. And it's hard. You're playing in hard mode at that point. But, let's say like if you're like aligned in a platform ecosystem that is like fast growing, right? Like think about like, the earlier days of Shopify, Webflow has been that for us. There's other ones out there, like, I know HubSpot has had some good momentum. And, like these kinds of being in like an implementation or like solutions partner for in these ecosystems, that's, always a plus for us because it kind of shows that there's tailwinds that you're riding and there's a partnership ecosystem that can generate leads for the business or like, some kind of a niche vertical. So, we talk about things like, or we like to see things like, if let's say it's like something specific within home services that's pretty sticky, but like, it's kind of growing because of whatever, environmental shifts or demographic shifts. And it's kind of like, all right, cool. Maybe it's like, I don't know, mold testing or something like that, like stuff that like people are, and then and you're providing like marketing services into that space and you have, really great roster of clients in that space and you have, and it's like, maybe recurring revenue and it's really solid. So it's stuff like that I think we're looking at first and foremost. And then, beyond that, honestly, like it's other stuff like, are they actually good at what they do? We'll look at like just, I mean, that shows up in client retention, of course, but also just, the technical / like creative or whatever, like skills competency of that team. So we'll kind of want to vet that. And then we talked a little bit about like recurring revenue, but like, the quality of that revenue. So it doesn't have to be like strictly recurring, but, do they have repeat purchases from those clients? And is it, like, are they able to kind of grow these things over time? And, how sticky are they over a period of time? And like, because that way, you just don't have this dynamic of like having to continue win new clients. And, I think that can get challenging. And then I'd say, some of the other qualities beyond that is on the leadership side, like, especially if we're buying with, SBA, then like you want to have a successor in place. I think that makes it attractive to us where there's a, clear number two who's like capable of stepping into the number one role. I think that is something we look at as well. Cause we're obviously as buyers not looking to insert ourselves into the business like some of these other folks using SBR, but we prefer it if there's somebody within the business who the team already trusts, respects, who can step into that CEO role.
Interesting. Yeah. I think my criteria is pretty similar. I would say like one thing that that I've found tricky about these small businesses, and I'm curious to hear how you deal with this or how you manage it, is owner expectations evaluation and reality evaluation. How quickly do you address that? Is maybe the quick question there. Is like, because often owner thinks their business is worth $10 million because they worked their whole life at it, but on paper and to get a loan for it, I can only get 2 million, So like, how do we address that? And how quickly do you kind of go into that?
Yeah. I mean, it all depends on like the, what stage the seller is, I'd say, and who they're working with also. So, I think sometimes if they're working with a broker, they kind of have,
they should have a benchmark.
They've something they've like talked through and so they're kind of anchored on some kind of a number, usually too high from our perspective.
Sure. But at least it's like in the ballpark usually, or like within an order of magnitude.
Depends on the depends on the broker or banker, whoever they're working with. Yeah. And so so that's one aspect. But like, if it's more of a deal that we've, the proprietary deal that we've sourced, right? Then it's, I think at that we always ask like, I mean, we first try to educate. We go, look, like, if you're an agency, that's, kind of this size of revenue and this size of, and this much EBITDA, like, you're looking at whatever, X to X. And then we also go like, look, you could, maybe you could get more, but like, us, like we're value disciplined buyers. And, that usually means like, 3 to 4x is our preferred kind of like multiple, but like maybe we'll stretch to 5 if there are certain qualities that, and so we set expectations there. And then And then we go, if they're still interested, then we go, oh, let's look at the numbers. And then, we'll see right away, like client concentration, the client retention stuff, obviously, like, yeah, their growth rates over the past few years, like all those things kind of factor into like, oh, is this like a 3x, 4x, maybe even a 5x? Like we can get to a number pretty quickly. And then, at that point, sometimes, yeah, if you're on the lower end of that, they're gonna, like they'll be like, oh, you know what, I'll hold on to this longer and then try to, work on it to increase that. So yeah, like I say that's how we've kind of broached the topic of, yeah, like valuation. And it's been good. Like, a lot of times, yeah, we just disqualify when people are like, yeah, like there's no way I'm selling unless, I'm getting like 20 million or whatever. Like, okay, cool. Like we're not a good fit. We'll just move on.
Right. Yeah, I think that's my approach too. Is like tell them very early. Here's the kind of formula we will use in the rough range, and obviously there's here's some levers you can that we want to look for to see where that range is going to fall. Right. I'm pretty transparent, honestly, on the first call, just to like I wouldn't want to set someone's expectations they're going to get a ton of money for something that they're not, or sort of just be way out of line for very long. And then I do think also though that you're also kind of pointing to another thing which you do well, is just keeping in touch with people, because look, just because they don't want to take a 4x valuation right now doesn't mean they won't in 5 years. And our careers, we got a ways to go in our careers, right? Like I'm planting seeds in hundreds of companies that probably won't really bear fruit for 5-10 years, and I'm okay with that. But yeah, you have to be okay with that long time span and kind of that turnaround there. Do you like you've actually got a system and a software for keeping in touch with people, and I am the same way. So I'll confess to you, I wrote a blog post about this back right when I got out of college, about my spreadsheet of like 50 people who I want to stay in touch with, and I still do it. I have another piece of software instead now, but it doesn't matter. It's the same idea. Tell me about your system, Peter, and like how that came about.
Yeah, I mean, this, like yourself, like this was more of a habit that we adopted, many years ago, I guess over a decade now. But it started off with like, look, like at a minimum, let's reach out to 2 people a week. Like, and this is when we're like thick in the, like agency, like fires every day. And you just like, up to, we're like just drowning in work, but we're like, look, every week, like, let's just do like just 2 people. It could be a client. It could be somebody from, like you went to school with or whatever. It doesn't matter. Just 2 people. And put it down on a spreadsheet. So, we have, and this is, start with myself and my co-founder. And then, we kind of let a couple other folks on the leadership team in on it. And we just like, and then when we have our like weekly check-in, we're like, all right, like, let's make sure everyone did it. And so it'd be like an accountability thing. So we just be like, all right, like, and if you didn't do it that week, we just make that person feel really bad about themselves. Like, hey, like it's 2 contacts, you can do it, and it's just like, and we just kind of, pressured ourselves to do it. And so that, and it's crazy because like, it's only 2, but you do it over every year. It's, it's over 100 touches every year. And so over time, we're like, let's ramp this up a bit, make it 4, make it 6. And like, we found out like the more you do it, the wider your surface area for these conversations and like, like access to some of these opportunities that you probably wouldn't have had. And like, I remember we got to a point where we were like doing 10 a week regularly. And like, it was great. It was just like all kinds of really great opportunities that came from that. So anyway, I think that's continued. And like, I think, even as Siwik and I've left Barrel, I think Lucas has still kind of, done a version of this with the team and stuff. But like now, it's funny because like I've written about this many times too, but like, with, we were working with like a consultant who like, was kind of messing around with like N8N a lot. And like, I was like, hey, there's this idea, like, can you kind of build this thing where I get like, it looks at all my inbox and then my calendar and it like surfaces, a certain number of contacts every day. And so we settle on 3 because I'm like, that's good. And so it's basically like a digest that comes every morning, like 6 a.m. And so by the time I wake up, it's like the first thing at the top of my inbox. And then I'm like, oh, it surfaces 3 people. And it's cool because it like kind of indicates when I last interacted with them based on my calendar and emails. And then also when like what their last LinkedIn post was, which is kind of helpful for some context. And then, yeah, it like, and it just gives me a link right there to their LinkedIn post. and then gives me their email. So like that's been cool because like that just makes it a little bit more seamless, and it's helped me to kind of not fall off that habit and just keep at it. And so yeah, it's that. Yeah, and I just like I don't think I never felt like I needed to be so like technical or like just kind of automate it with that kind of stuff. It's more about just taking the time to like think about that person and being like, all right, like what could I say, like what could I how can I add value, or like, oh, like, and it's little things too, just like, hey, actually this is great to see this name because I was just looking at this thing that's relevant to them, let me just share that with them. And it was just like you do that. Yeah, let's say you even do that like 5 times a week, that's like 200 plus, 250 plus touches. Like it compounds in such a beautiful way that I feel like it's still like one of the things, like you just do that and you'll be fine.
Yeah, totally, man. I've gotten jobs off of that, having that list, and compete, staying in touch with people. I've hired people based on that list and staying in touch with people. I've gotten plenty of clients and partners. My current business partner basically was the reason we stayed in touch, and that we partnered up on stuff. So yeah, I can never. It's funny because I couldn't tell you. I couldn't go meet somebody off the street and say, I guarantee you this will get you hundreds of thousands of dollars or whatever, but I pretty much could. It's just a matter of you have to stick with it and do it. Yeah. Well, Peter, I had a million other questions to ask you, but we're kind of running short on time. I'll ask you my last one that I ask everybody, because you actually just wrote about this too. You're a prolific LinkedIner, so this makes this easier. What's a book you've read recently that kind of impacted you? And you had a bunch in your LinkedIn post, but I'll let you surface your own answer to that question.
Yeah, I think like it's an easy one, like Science of Scaling by Benjamin Hardy. That one has been a really just impactful and kind of helping me think about how to zero in on like what's important, and then also use time as a tool to kind of accelerate certain decisions. Because and just as an aside, like when we started Barrel Holdings, we were like, oh, we'd love to get to like 9 figures of revenue plus, and like 20 plus million EBITDA whatever by in the next 10 years, right? But that's like a far off time, and you can make a lot of suboptimal decisions before that time comes. And so this book, part of the message is like, well, take that same goal and then plant the flag for 3 years, and now it's like, what do you got to do? And we've done that exercise, and it's like, oh crap, there's a lot of stuff that we're doing right now that's super suboptimal. And part of that was kind of like, we pruned our portfolio quite a bit of like agencies that, we thought just weren't going to help us get there. And then really dialed in on acquisition criteria that we thought were going to better position us to get there. So it's a great tool. That book has been, really fantastic. And I think, it applies in so many different areas of life and business.
I love that. That intentionality is surprisingly rare, I think, because entrepreneurship is such an open-ended sport that a lot of people get to a certain point where they're making good money, and it's just like, well, I don't know, I just want to keep doing this, which nothing wrong with that, right? But like when you just say, well, I just kind of want to keep doing this, you're not going to grow. You're not going to really like dramatically change the business because you're just doing what you want to do, right? And again, nothing wrong with that approach. Obviously, like if you're happy, you're happy, and I'm not going to shit on that. But I do think that like I'm similar to you. I have this like need to constantly be upping the ante a bit and like driving something towards another bigger goal. It's probably a sickness, but I think that sounds like it would resonate with me as well. Well, Peter, this has been awesome. I always love catching up with you. Thanks so much for the time today. We will put links to Barrel Holdings, your newsletter. Anything else you want to plug? I mean, I don't know what else we should tell people about.
Yeah, I have to talk about Agency Habits, which is our resource.
Oh, Agency Habits,
site.
of course.
Yeah,
we didn't even get to that.
No, the agency leaders, right? It's like it's a way for us to kind of give back, kind of take lessons learned from our agencies and share it with everyone. And we do have a podcast, the Agency Habits podcast, that my co-founder Saywook and we talk about various agency topics, and also like stuff around how to get your agency business ready for an exit.
Yeah. And for anybody listening who doesn't know Peter's work, he's super transparent. So he's not going to like pitch you on, you got to come sell the Barrel Holdings. He is like super just helpful. Like I got to applaud you for that. I think you're in that, like, the people who kind of do the build in public thing. It feels like that's what I get with you. So thanks for that, Peter. Thanks for listening, everybody. And we'll put links in the show notes, and we'll see you next time.
All right. Thanks.
Thank you for watching this episode of Retain Trust. If you like this one, give it a thumbs up and subscribe on YouTube. It takes 2 seconds and it helps others find out about the show. And if you have questions or suggestions for a future episode, leave a comment. See you next time.